Good morning, students. As we have done the earlier sessions of money, the modern forms of money, demand deposits, checks, we have still left with the last part of the demand deposit. That is why demand deposit shares the essential features of money, and basically the facilities of checks against demand deposits makes it possible for direct settlement of payments without the use of cash. Now, these demand deposits basically are accepted as a means of payment as well, along with the currency. They constitute money in the modern economy. Now, we must remember the role that the banks play in these types of payments are very important. But for the banks, there would be no demand deposits and no payments by checks against these deposits. The modern forms of money like currency and deposits are closely linked with the working on the modern banking system of the economy. Now basically my next topic is loan activities of banks. Now basically bank is a kind of an organization where we can withdraw money, we can keep the money in a safe manner. So it is an institute which keeps money safely for its customer, that is banks. So during this loan activity, it is an interesting mechanism where banks keep only a small portion of their cash, or I can say deposit, in the form of cash with themselves. That means the banks will keep major or smaller portion of cash with themselves, so that whenever the depositors would come to withdraw money, there would always be a provision to pay them at a proper period of time. Now in banks, the major portion can be 15% of the deposit as cash. Yes or no? Since any particular day only some of its depositors come to withdraw cash, and the bank is able to manage that. Now the major portion of these deposits can also extend loans. So there is a huge demand for loans for various economic activities. Now my next diagram which suggests that how the loan procedure works. So basically I have drawn two diagrams. First diagram, the depositors are involved, where they make deposits and they withdraw those deposits and get interest from the bank as well. Now when it comes to loan, basically the borrowers, or I can say people who provide loan, or the banks who provide loans to the borrowers, but at a certain period of time there are certain conditions as well, that within this period of time the borrower should repay with interest to the bank whatever they have taken from the bank. That is what the loan procedure is. It is the simplest form you can be taken into consideration, and I have written certain definitions as well. For today you have to write these definitions as it is an important concept, so you must know what do you mean by loan, who are depositors, borrower, bank. Now basically, to start with loan, it is the act of lending something, suppose whether it is in cash or whether it is in kind. It is a form of loan. Now if I am the person who is taking 500 rupees from you, that means I have to repay that 500 rupees within a certain period of time, which I have promised that within 6 months I will be paying back with interest. That is the amount which is involved, or the act which you are giving me the 500 is the loan. Now when I am talking about depositors are who? A person who keeps money in a bank. Those are depositors. Suppose we always write deposit checks, or we write we will be going to deposit cash, as we will be getting small pocket money as well. So we are the depositors and we have account created in our banks. So that is what depositors mean. Now a borrower. Now here the definition is a person who is using the funds on credit. Now basically it is also known as borrower. Why? Because if I am taking something from you, obviously I have to repay within that specific period of time as well. So if I am the borrower, I am making certain statements, or I am signing somewhere making the fact that I will be giving you 500 rupees within that period of time. That means I have taken from you the 500 rupees and I am using it, the 500 rupees, for other purposes. That is known as borrower. So I am the borrower. As we have discussed earlier, what do you mean by bank? Bank is an organization which keeps money more safely for its customers. So basically examples of bank can be private as well as public. SBI, IDBI, Bank of Baroda, and many more as well. So if you have any doubt, this is a very small concept. In the video, in the later part, you will come to know more about it. Thank you for today.